Hello traders, Nick Shane here looking at Dropbox. It reported earnings after hours and it's having a good reaction as opposed to somebody else that isn't, Zscaler. So this guy is spiking, and I believe it's up to almost 22 bucks a share, or at least the high of the spike after hours on 220 is almost $22. Let's use it's 21.90 something. So let's use 22 for round numbers, and the question is, do I sell it? Do I buy it? Do I chase it? So here's my take. Fundamentally, I don't like the company just because I use them. I've never paid them, and I will never pay them for anything. As soon as they ask for more money, I'll say I'll see you later. I just use them for convenience, but I do have alternatives. Google mainly. It's free with Google. It's not super expensive from the standpoint that it's only 4.7 times sales, probably more now after the spike, but it still loses money. So it's a growth company. Is it? I don't know. You better check the metrics to see if it's actually a growth company or not. If it is a growth company, then I don't mind overpaying for it as far as valuation from the typical sense. So here's the take on it. If I were long it and I'm benefiting from the spike, I would exit. If I was stuck long and the spike fixes my trade, I would exit. I would, if I'm long as a profitable trade, I would exit or lock it in or take out half or play with house's money, whatever. I wouldn't bank on it continuing right away. It may after the fact, but this is a tripping point. So I'm showing my answer first, and then I'll tell you why. So the fact that this is an inverse head and shoulders, I guess you can call it, the neckline, they banged against it, and then looks like they just busted out and priced in the complete target and then some. If it was a regular rally and they broke out of it, then I would say it would fade around 21 and a half. So the fact that they overshot remains to be seen where they open tomorrow. And you know, if I was a betting man, I would tell you that probably gonna try to get to that high poke after hours of almost $22. But they may fail. Get gut. I can't bank on it. So why is the 22 a place to exit? So if I'm stuck in a bad trade and then I get a gift of a pop that fixes my trade or it reduces my loss to like something hey, thank God I only lost X, I would get out. It's a gift. And then use some time to decide, okay, maybe I was wrong to get out and re-engage rather than to miss the opportunity. Remember the Roku pop. Popped and then faded. So I'm not giving recommendations. I'm telling you what I would do, and I'm going to tell you why. So 22 is a pivotal zone. To me, it pops off the screen, and I'm going to try to explain why. So I'm going to mark it up, and I'm going to bring in... Oh, somebody was talking about Micron on TV, so I just posted one, my levels on Micron. Okay, so new, Dropbox. This could be any chart. So this was the breakout. This is where I expected resistance right here from the chart before the breakout. And this is the high poke, let's say it's 22 after hours. Why is it a place to leave? Like if I'm look left, this was a failure point, very emphatic on earnings. So they had reasons to do it. It wasn't like, they had a bad day in the market. Very emphatic. So two fails. So right now, this is established resistance, right? Once, twice. Emphatic. But the problem is, it used to be support. This whole zone was support. Emphatic support. Bounce. Boom. Emphatic. This is a tail. It means they tried during the day. Is this a daily? Yes, this is daily. So they tried during the day, but then whoop. How big of a rally is this, right? $4 on 21 base. That's pretty good. So this was definite support. Suddenly, it became resistance. Look, if I extend it, it's resistance. Why should it change right away? Proof is the onus to prove that they can change the fact of it being resistance falls on the bulls. So the buyers tomorrow need to hit the wall and say, maybe we'll drop a few pennies and then boom, bust through it. They don't usually just go... onus is on the bulls to do bang, maybe a couple of times, go over, and then come back down to use it as support so they can prove that they can use it as support for forward building. I'm not saying the company is not going up. I don't know that. That's up to you. But I'm telling you why this point, the high of the after hours, the 22 mark, wherever they end up being, is a logical place to book some. That's my opinion. So watch these two candles right here. What the heck is that all about? Right? So clearly this level is allergic, or at least it draws a lot of action. Action means breaks. So if you're falling to a level that draws a lot of action, it's going to be support. If you're rising into a level that draws a lot of action, it'll be resistance. Why? Because the machines are going to wake up and they're going to trade it. So it'll be like buyers overwhelming the sellers until they hit here. They'll be like suddenly as many buyers as sellers. Boom, they hit the break. It's a zone. It's not a hard line in the sand. Okay, so let me zoom out. Oh, by the way, this fall from here was for good reason too. Whatever they said here. Whatever they said here. Look, whatever they said here. Oh, perfect. Pop and drop on the earnings. They popped again after that, but we don't know what the whole market did at the time. Okay, so this is a daily chart, 1 year's worth of data. I'm going to go to a weekly chart and see what happens. So this is a fairly new issue, right? So it doesn't have 5 years worth of history, but this is all the history we have. Each candle is 1 week, so it eliminates the noise, makes things easy to see. And let me see if I can prove my point. So we're talking 22. That's that same level. That's the 2 R's. And that's how pivotal it has been, right? Let me extend it. Look at this candle right there. So the zone has been pivot. So they fell below it, boom, boom, and now they're back at it. What are they going to do? This, or fall a little bit and then this, or just fall? We don't know. I'm not convinced that they can compete with Google and the like. They're just, that's personal preference. If not 22, where? There's another ledge right here. This whole area is a ledge, so you have room. But you don't believe me what I'm saying, that pivot points matter? Okay, how about this pivot point? There's going to be noise outside. I can hear my son trying to start up a 2-stroke bike. So let's see here. 1 fail, 2 fail, those are resistances. 3 fails, a ledge from which they failed. But before that it was support. So support turned into resistance, and then they never recovered from it. Same concept on a lower level. So this is going on at 22. This already happened at 26 or 7. You're saying, well, there's a lot of room between here and there. You're missing the point. The point is, it's rallying into a pivot point. To me, my trading style would be, it's going to hit a wall. So if my trade was a trade and not an investment for years, this is a time to trim it, lock it. If I'm stuck in an investment and I'm changing my mind about it and I can't wait, if let's say yesterday I was like, oh shoot, I'm down 20-40% on it, I wish it would just come back close so I can get out of the stupid investment that Bob put me in. I don't know, Bob. Anyway, sorry, Bob, whoever Bob is. So this would be the time to say, thank the Lord, I'm out. That's my opinion. So is it a time to chase? Definitely not. I can tell you that it's not an obvious place to start at 22 long. This is not an obvious place to start at 22 long. That's the only point here. And this logic applies to any chart at any point in time, index, ETF, whatever you want. Nick signing out.